Well, let's start the show with the day's market action. Bulls maintained the momentum on the Lal Street as Sensex and Nifty gained for the second straight day nearly 600 points and the Nifty gained almost 200. Financials were the top gainers with the Nifty Bank Index gaining over 500 points today. Well, speaking of Qs, here's one big Q everyone will be watching for. All eyes are now on the crucial U.S. Federal Open Market Committee meeting that starts today. A CNBC survey shows that a majority expect 75 BPS hikes. In fact, Wall Street is expecting the Fed to continue hiking rates until March of next year. CNBC's Steve Leisman brings us more.
Wall Street increasingly embracing the idea that the Fed is going to hike and hold at a restrictive rate rather than the old idea, which was that it would stop short and then cut quickly. The September CNBC Fed survey finding that 75 basis points is the call for this week. All of our 35 respondents, except for two, who put it at 100, but mostly saying 75. Then that peak rate, the terminal rate, 4.26 now. And that is 40 basis points higher than the July survey. That peak rate is hit in March of 2023. Then the important question we asked this time, how long will the Fed hold there? 11 months is the number, with some saying as few as 3, some saying as many as 24. The recession risk now 52%, little changed in the next 12 months, by the way, little change from the prior survey. John Riding writes, the Fed has finally realized the seriousness of the inflation problem and has pivoted to messaging a positive real policy rate for an extended period of time. That's the important part there. So there's the trajectory. 240 right now, 238, call it. We reach near 4% by the end of this year, go up to that peak rate in March. And then you can see that there is some cuts built in. That's the result of some thinking the Fed turns tail quickly. But the average, again, thinking the Fed stays there and holds, with cuts coming perhaps into 2024. Rates stay high because the 35 respondents think that it takes a long time for the Fed to bring down inflation to its 2% target. We're 8.3 now. We go to 6.8 on the CPI by the end of the year. 3.6 by the end of 2023. It isn't until 2024. Just 60% believe the Fed hits the 2% target. By the way, more than 80% of respondents did not change their inflation forecast over the next 2 years because of the Inflation Reduction Act. Along with the recession risk comes an expected rise in unemployment. Take a look here, what's expected to happen. You're at 3.7 now. Go to 3.8. Not too much damage by the end of this year, but next year, 4.4. It's still an historically low rate, but you often don't see a 1 percentage point increase from the bottom outside of a recession. While these respondents have argued over the past several months that the Fed was way behind the curve in tightening policy, many also now are concerned about the opposite, that it would go too far or further than it needs to go.
Well, back home, Reserve Bank sources have said that no decision has been taken to allow non-banking financial companies to issue credit cards at present. Now, currently, NBFCs can distribute credit cards of banks with whom they have tie-ups. Lata Venkatesh is joining us now with more details. Lata, tell us, what are your sources telling you within the RBI, and does this serve as a body blow for some of these NBFCs?
Well, the fact of the matter is that the Reserve Bank is not considering this at the moment. Sources close to the central bank told us, and I'm quoting verbatim, this issue is not on the table right now. Now, it becomes important to clarify this because there has been market speculation that very strong NBFCs like Bajaj Finance may be allowed to issue their own credit cards. You know, at the moment, they are allowed to distribute credit cards of other banks like Bajaj Finance distributes RBL and DBS, but they distribute that only into the top metros, whereas Bajaj Finance lends in a lot of tier 2, tier 3, tier 4 companies. So if they're allowed to issue credit cards, they can really mine that depth. But it is not on the table. Now, the reason why the speculation in the minds of investors came in was because Reserve Bank issued a fresh set of master rules on credit cards on April 21st. And there in that was a sentence, without the prior approval of the Reserve Bank, NBFCs shall not issue debit cards, credit cards, charge cards, either physically or virtually. Now, this gave the impression that with the prior approval it is possible. However, when we asked these sources, they said it is a complete reiteration, a cut-paste of a rule that already existed, and nothing has changed, nothing fresh is on the table.
Right, Lata, thanks a lot for that. Let's take a quick look now at some of the other headlines that we're tracking. Sanjeev Mehta, the president of industry body FICCI, says that the spike in retail inflation isn't homegrown and several factors, including the COVID supply chain disruption and the Russia-Ukraine war, are behind it. Mehta, who's also the CMD of FMCG giant HUL, told my colleague Abhimanyu Sharma that one needs to ensure that low-priced unit packs are protected as far as possible because they go to the consumers with low income. Take a look.
That retail inflation is not a homegrown. This has happened, inflation has happened for several factors. First is the supply chain disruption which happened during the COVID era. The second was huge amount of spending, fiscal stimulus, which was done in many Western developed nations. And the third has been the war in Ukraine as well as between Ukraine and Russia. I think these are the three factors which has resulted in inflation. And the difference this time is that it has spread across commodities.
So are you looking at a fresh round of price hikes, even though at HUL price hikes are always the last resort?
You know, price hikes again depend on what happens to commodity. There is no one-to-one correlation between the price increase of commodities and the price increase of finished products. If you look at the last quarter, our net material inflation was in the vicinity of 21%, whereas the price hike that we had taken was just about 12%.
Well, another CNBC-TV18 news break gets confirmed. Inox Green Energy is all set to make its D-Street debut as market regulator SEBI has approved its 740 crore rupees IPO proposal. Now, sources tell us that the issue comprises of fresh issuance of shares worth 370 crore rupees and offer for sale for the same amount by promoter Inox Wind. Now, the IPO will likely be floated in the second half of October. Meanwhile, global investment firm KKR is expanding its investment in India's clean energy space. The company will invest over 3,500 crore rupees in Hero Group's energy arm, Hero Future Energies. The investment is expected to drive the company's growth in domestic and global markets. The investment also seeks to support capacity expansion across technologies such as solar, wind, battery, storage, and green hydrogen. Lender of subsidiary of Cafe Coffee Day has moved the NCLT seeking insolvency resolution process against the firm with the NCLT. Now, this is in connection with a loan default of over 120 crore rupees by the subsidiary. Cafe Coffee Day has requested its subsidiary for an amicable settlement of the matter via discussions with the lender. Well, here's the big news maker of this evening. The MD and the CEO of M&M, Anish Shah, is seeing strong demand momentum and the company is planning to ramp up capacity. Speaking to my colleague Parikshit Luthra, Shah said that M&M is already working at 100% capacity utilization, that the SUV portfolio is seeing strong demand, and Anish Shah is hoping to increase capacity by more than the current 30%. He also clarified that the automotive, tractor and electric vehicle businesses will not be separated in the short to medium term.
We have huge demand, as you know, across all our models, and therefore our capacity is fully utilized, and we are expanding capacity. We may have some of that in the next few months, but then more in a few months beyond that. For us, capacity creation is not as much about the plant. Our Chakan plant has the ability to expand and be able to put in more lines. It's about getting the entire supply base ready to be able to generate a lot more capacity for us. We're not looking at a 20-30% capacity increase. We're looking at far greater than that. The step we've taken with the EV co being separate is really the primary step. There are no plans in the short or medium term to look at any further separations as such. And we believe that with the new EV company that we are setting up with an investment from British International Investments, will really be a company that takes electric to the next level.
Well, you can catch that entire conversation with Anish Shah, Managing Director and CEO at M&M, on our special broadcast News Center at 9:45 p.m. right here on CNBC-TV18. Well, staying with the auto space, Road Transport Minister Nitin Gadkari says that India should target bringing down its logistics cost to 10% from the current prevailing 14 to 16% of the GDP. This, the minister feels, will enhance India's export competitiveness. Speaking at an event in the national capital, Gadkari said that the government was looking at developing 27 green express highways.
The automobile industry's growth is so fast that presently the day will come within 5 years that whatever the population strength will be equal to our automobile strength. We have taken a decision to make 27 green express highway. We will reduce the time and will reduce the pollution. So the idea is reducing the logistic cost from 14 to 16% to 10%. That will be a great saving, and by which we will have more export. At least we will increase 50% exports, and that is very important for our economy.
Well, from the aviation space now, budget carrier Spicejet has reportedly sent 80 pilots on leave without pay as the airline aims to rationalize its costs. In a statement, Spicejet, without giving a number, confirmed that it has sent certain pilots on leave without pay for a period of 3 months. The airline has blamed prolonged grounding of the MAX fleet, leading to excess pilots, forcing the management to send some pilots on leave. The airline has assured that these pilots will be back in service as and when the MAX aircraft are re-inducted. Spicejet has also assured that it has enough pilots to operate its full schedule whenever the DGCA restrictions are lifted. Shares of Canfin Homes slumped in trade after Girish Kuzgi resigned as the MD and the CEO of the company 2 years before his term ends, citing personal reasons. Now, Kuzgi was appointed the top boss for the Canara Bank promoted company in September of 2019 for a 5-year term ending in 2024. In a major relief, the Reserve Bank has taken Central Bank of India out of the prompt corrective action framework. It was the last lender remaining under the restriction. RBI says the bank is not in breach of the PCA parameters and has provided a written commitment that it would comply with minimum regulatory capital norms, net NPA and leverage ratio on an ongoing basis. The Adani Group has pledged shares worth $13 billion in ACC and Ambuja Cements. The group pledged close to 57% stake in ACC and 63% stake in Ambuja Cements. Union Steel Minister Jyotiraditya Scindia has said that the demand from industry to cut export and import duties is being discussed at the highest levels. Scindia said that he has written to his colleagues in the government on the matter and promised that a judicious decision will be taken soon.
One question on the issue of cuts that are being considered by the government in export duties for iron and steel intermediates.
I had mentioned this to you all that this is certainly something that is under active study by my department as well as the government. We are certainly discussing this at the highest level. When a decision is taken on this, you shall be the first to be informed.
Sir, just on the similar issue of import duties being required to cut down on, especially on key inputs, whether that's magnesium or natural gas, customs of natural gas, is that also something being considered?
I have, through my advisory committee in the steel ministry, and as you're aware, I've set up 2 advisory committees, one for the integrated steel producers and the second for the secondary steel industry. I'm actively engaging with both of them. We have formulated issues that need to be looked at, both at the ISP level and the SSI level. I'm in the process of writing to my colleagues on these issues. We will certainly deliberate it and take a judicious decision in the near future.
Well, time now for a money control exclusive. A bitter ownership battle is brewing at McDowell Holdings. A group of minority shareholders allege that former promoter Vijay Mallya is trying to get back control via proxy companies. Mallya, meanwhile, has denied any connection. Dinesh Unnikrishnan gets us more.
That's right. It appears that there is a big legal battle is ahead between a section of shareholders of McDowell Holdings led by Porinju Villiath, and the creditor of McDowell Holdings, which is Sunstar and Real Estate, which is a Chennai-based firm. Yesterday, the company informed the exchanges that a company called Phoenix Theme Infra Projects won the, came with a successful resolution plan, but the shareholders have now moved to Supreme Court, alleging that there is a collusion between Vijay Mallya and the creditor and this new company to take over the company ownership. They say that this is a clear misuse of IBC cases. The shareholders had offered to pay up the entire amount to the creditor. As we know, McDowell Holdings was taken to NCLT in April this year for after it defaulted about 17 crores of loans. The shareholders offered to pay it up, but the creditor didn't accept it. We'll look for more details once the case reaches the Supreme Court.
Well, time now for a short break, but coming up on the other side, B Capital, a key investor in Byju's, backs the EdTech company even after it posted 4,500 crore rupee losses in FY21. Details when we come back.